SpaceX's S1 filing just dropped, and it reveals something genuinely wild: a total addressable market of $28.5 trillion. Here's the kicker. A staggering 85% of that colossal sum isn't focused on rockets or traditional satellite communications. No, it's fixated squarely on AI and data processing, explicitly categorized under industry code 7370. This visionary potential, this massive bet on AI, propelled SpaceX to an IPO valuation of $2.3 trillion in its opening hours, instantly making it the seventh most valuable company globally. Its valuation is comparable to the entire GDP of the United States. It's a figure that immediately sparks questions about an overheated market, pushing the very edge of innovation. Yet, as we dig deeper into the actual numbers, that glossy, visionary facade begins to show some serious cracks. In 2025, SpaceX reported an impressive $18 billion in revenue, marking a robust 33% year-over-year increase. That kind of growth usually signals strong health. However, here's the stark reality. For that same year, the company posted a substantial $5 billion net loss. This deficit had immediate and critical real-world consequences, directly leading to its rejection from the S&P 500. They failed to meet fundamental profitability requirements, a basic hurdle for market stability. The plot thickens even further, especially after the February 2026 merger with xAI. Retrospective accounting unequivocally attributed that entire $5 billion net loss in 2025, every single dollar of it, directly to xAI's operations. Think about xAI burning through capital at an almost unfathomable rate, approximately $28 million every single day throughout that year. And the pace didn't slow down. Capital expenditure figures from Q1 2026 paint an even more challenging picture. xAI alone reported $7.7 billion in capex for that quarter, putting it on an annualized pace of $30.8 billion. That's more than double its expenses from the prior year. Simultaneously, SpaceX's own capital expenditure surged to an unsustainable 215% of its total revenue, a clear sign of financial strain. Now, let's talk about where all this immense capital is actually going, and, more importantly, what it's producing. xAI's flagship AI offering, Grok, has secured an estimated 0.4% enterprise market share in the critical, rapidly expanding AI sector. That's a remarkably low adoption rate in a segment projected to drive core revenue for this colossal vision. And powering Grok, which requires incredible processing power. A substantial partnership with Google for GPU compute, coming at a staggering cost of $920 million per month. This arrangement is further complicated by Google's significant 6% stake in xAI, raising legitimate questions about potential circular financing mechanisms. Are we potentially seeing artificially inflated revenue boosts here? Looking ahead, the vision remains immense. SpaceX plans a monumental undertaking, launching up to 1 million satellites specifically for orbital AI compute by 2028. This objective is undeniably groundbreaking, but it comes with a host of immense engineering challenges. We're talking significant space debris implications, the profound complexities of heat dissipation in orbit, the absolute necessity of radiation shielding, and the inherent problem of GPUs rapidly becoming outdated in a tech landscape that shifts by the day. The sheer scale of this ambition is breathtaking, no doubt. But the combined financial and technical realities demand a truly grounded perspective at this critical juncture of innovation. The full picture isn't clear yet, but these numbers don't lie.